Hello and good afternoon, good morning, good evening to everyone from across the world attending our event today. My name is Bob Weissman. I am the moderator for today's event. As a quick starting disclaimer, there is no recording, sharing, or posting of this presentation allowed. As also a quick note, if you ever have issues with listening or hearing the audio portion, you can simply log off, log back in again. That does tend to fix any audio issues that may arise. So welcome to today's event of how to spot leading stocks in a bear market with two-time US investing champion, Mark Minervini, along with his co-presenter today is Mark Richie. Today's event is sponsored by MarketSmith, powered by Investors Business Daily. And this is also brought to you by Minervini Private Access. Mark is the author of two best-selling stock trading books, Think and Trade Like a Champion and Trade Like a Stock Market Wizard, both available on Amazon. We like to think of these as the flight manuals for the process of learning how to trade, similar to learning how to become a Top Gun fighter pilot of an F-16 fighter jet. We then have our flight school, which is our master trader program. This is held only once a year, coming up in November. If you like what you hear today, then this is where you will be taught everything about Mark's methodology from A to Z during what is a 7-day event. You'll spend over 30 hours learning from Mark and his special guest co-presenter, Mark Richie, who is featured in the book Momentum Masters. This event includes 4 days of curriculum, a live trading day where you will be trading virtually side by side with Mark, learning from his pre-market routine, how he handles the opening bell, his stock screening methodologies using MarketSmith, any stock trading during the day right through the closing bell. Additionally, there are 2 separate days for question and answer sessions, so 7 days in full that you would be spending with Mark. Registration is now open. There are limited spots. Go to forstocktraders.com to read more about it and to register. If you want to have daily real-time access, the equivalent of flying in tandem with Mark as your wingman, then our Minervini Private Access membership is exactly for you. This includes getting each day from our real-time premium platform, Mark's watch list of stocks, his market notes and commentary, all of his buy and sell recommendations, including full trade management of each, weekend study sessions with market analysis and top stocks coming up from Mark's research for the upcoming trading week. The interactive trading room is where you have access to Mark each week to ask Mark your questions during our live question and answer sessions. Our trading logger analytics software is where you can enter your trade data and have it analyzed by Mark's proprietary software to identify areas of strength and weaknesses from your own trading results. This analysis is what allows you to track and improve your performance by focusing on those weaknesses and seeing where you are performing well to maximize your results. And our newest tool added to our arsenal is our Monalert module. This is a tracking and alerting module designed by Mark for his own personal use and has now released this cutting edge technology for everyone to use that is available exclusively for our Minervini Private Access members. This software will monitor your stock positions automatically, delivers a report each day of the violations and confirmations that Mark wrote about in his books. The software finds them and informs you of when they are happening. It will help you to improve your skills as a trader by learning how to identify what your stocks are doing each day based on Mark's rules. And this is where you get the knowledge, the tools, the training, and the experience from Mark's 40 years as a real world trading, 2-time US investing champion, and learn how to trade like a champion. It's all available for you at minervini.com. And now I'm going to ask you to stand by for one moment, and we'll be getting started in just a moment. So with that said, if you're ready for today's event, let me introduce to you 2-time US investing champion, Mark Minervini.
Okay, hello everyone. Let's make sure everyone's hearing me okay. Can we get a sound check? And just if you can hear me, just raise your hand. There's a little raise your hand button. I'm not seeing any hands raised, so is that
No, there's thousands.
Okay, there are. Okay. Okay, great. I'm not seeing it. And we have Mark Richie. Mark Richie, let's make sure we're hearing you okay.
Good afternoon, everybody. Hearing me okay?
How's that looking, Bob?
I'm seeing, again, thousands of people.
Okay, great. Okay, so everyone's hearing us. We can get started here. So today we're going to look at obviously a subject that is timely because we are in a bear market, and we want to be able to find some of the areas that may be the leaders, some of the better stocks that may emerge from this bear market. I'm going to talk to you. We're going to try to do this in we were going to try for an hour, but I'm not sure we're going to get through all this in an hour. We might have to go longer. So hopefully maybe an hour and a half it might be. I'm not sure yet. We'll see. Let's start off with, and again, this is sort of a bunch of pages out of the Master Trader Program, if you will. Some directly, some I've prepared for this in particular, but this is a segment of the Master Trader Program where we talk about relative strength and looking to buy at certain points in the market when the market is bottoming. And the reason why is because 96% of the biggest winning stocks, the ones that make the big moves, the ones that emerge, they come from corrections. So corrections are good. Of course, if you got caught in the previous bear market and you're down big in your account, well then you'll be digging out of a hole and fighting your way back. And then of course there'll be you've compounded some mistakes, and the correction may not be seen as such an opportunity. However, getting in sync with the market, the best thing is to start from a correction, from cash, and then start looking for these winning stocks. By the way, I just want to say real quick, Mark Richie, thank you for being here. I didn't welcome you in the beginning here, but I want to welcome you for being here. Thank you very much. Mark is also each week live Q&A with Mark and I live on the Minervini private access platform. So Mark is not only my co-instructor for the Master Trader Program, but he's a senior instructor at Minervini Private Access. Let's talk about, there's three places that I look for stocks to set up and to start emerging when we're in a bear market. And some people think that you have to wait for the market to be up for a certain amount of time, but actually a lot of stocks will set up, or at least some of the better stocks will start to set up even before the market makes a low. And it depends. There's different types of environments. Sometimes you get a V-shaped bottom. Sometimes you get one that takes a bit longer. I'm going to go through a few of those right now and show you some examples. But I have three spots that I really key in on, and I call them predictive, coincident, and confirming. And it's not really important whether you're in one or the other, or usually it's a combination of all of them. Usually when you get a bear market and stocks start setting up, they're going to be setting up all around these periods. They're going to be setting up some before the market even makes a low, some coming off the lows, and some after the market makes a low. And even going forward through, if you enter a bull market, you're going to have stocks setting up for months and months on end, and sometimes even years. But this is where you're going to look for, and the reason why, and I'll tell you in just a second, the reason why this is a golden opportunity is because it's the easiest time to spot the leaders. We'll get into that in just a second. But let me just show you what this looks like with some diagrams, and then we'll bring up some stocks. So think of this, just look at this top here, and I think you guys can see I have a mark. Are you seeing my little red dot here?
Absolutely.
Okay, good. So here's just a stock just setting up, and think of it as my signature VCP, where you get some tightening and you're forming a base, whether it's a cup with handle, a flat base, however you want to whatever you want to trade from your setup, if you will. But it's setting up as the market is in the down leg. And sometimes what will happen is these stocks will break out, and you won't know at the time. The market will be coming off of a low, and you won't know if that's the low. But then the stock breaks out and the market makes another leg down. And this is where the rubber really meets the road, because now either those stocks are going to fail that broke out, or they might just pull back to the breakout, not stop you out. And then the market turns up off that low, and you've really got yourself positioned quite nicely. And then you should see another wave and have more stocks come in that I call coincident. Now, sometimes you won't get that. You won't get where you have a lot of stocks setting up in a predictive fashion. You might get where a lot of them start setting up coincident. This will happen very often around the time that you get a follow through day. You get an O'Neill follow through day up 1%. Usually on the fourth day or later, coming off the lows. That's a great sign. If you get a follow through day, you see stocks setting up, and right around that time, you'll start to see stocks breaking out of bases. That's coincident. Confirming is later on after the market moves up the right side, and again, you may get a lot of names setting up predictive or coincident. You may get none. You may get a little bit sort of speckled around all those areas, and then get some confirming. Every market environment's a little bit different, but these are the areas that you want to key in on and look for exactly what I'm about to show you in the charts of the individual stocks. Now, I'm going to look at a few market precedents, and pretty much all the stocks that I'm going to show you, I traded, or I might have tried to trade and I missed them, or I got stopped out of. So I try to look at real life examples that at the time I was actually trading and didn't have the benefit of hindsight, and these market periods that I lived through, and I've been through now. I believe this is my 9th bear market, 8 bull markets and 9 bear markets. So it'll be 9 and 9 when you get the next bull market that comes out of this bear market. Some of them I remember really, really well for reasons that might have been a tough market, or it might have been a market where I made a lot of money. The 1990 market going into 1991 was exceptionally memorable for me for a number of reasons. But one thing is it really, you had all these areas. You had opportunities. You had a lot of predictive names, or I shouldn't say a lot, but a good number of predictive setups. You had a bunch of coincident setups, and then you really started to build out as the market built that right side. You had a lot of confirming coming out of big bases. The smaller bases emerged over here on the left. When we started coming off the lows, we got the follow through day. We had more breaking out of bases, and then really large bases started breaking. As a matter of fact, over here on the right here, it was around January 15th that we started taking off here. We went to war in Iraq. Investors Business Daily ran a headline. It said "Cup with handles proliferate," and it showed all these charts. It was like the stocks in the news, and the little charts they show. There was 30 or 40 charts, and it was Microsoft and Home Depot and Philip Morris and names you probably wouldn't know or remember: Ballard Medical Products, T Square Medical, U.S. Healthcare Compare, Amgen. Somewhere where you even would think now, oh yeah, Amgen, Microsoft. Back then, they actually weren't very well-known names. They were mid-cap names, some were even small-cap names. So you built out this right side. You had a lot of stocks set up there. Now, go back, take a look at this is the period that I did not live through because I'm 57 years old and I started trading in 1983. But in the 70s, I certainly have studied the markets all the way back to the 1800s. You had a similar situation where you had some time off the bottom, and you came off the lows, and then you pulled back, and you actually set up a little, you see like a little base right here off the bottom. You ran up the right side, and then you got that right side build out. And this will happen. Most markets that when they bottom, they'll build out that right side at some point. So even if you miss coming off the lows, you usually get that second really golden opportunity, and even many others as the market goes into a bull market, because bull markets don't end overnight. Now, when we go look at the COVID decline, the COVID crash that many have called it, it was very fast. It was so quick down the left side that you didn't really get a chance for a lot of stocks to act predictive. But there were some really telltale signs of some names that set up around this time, and you still had where you ran up that right side, even though it was a very V-shaped recovery. You still can see where you had that plateau here and you had a plateau here, and that's where we started seeing a lot of stocks setting up. As a matter of fact, we were buying stocks. We bought our first stock on April 6th, coming back into the market. We had a follow-through day right here. Mark, do you remember? You called me. We've told this story a couple of times, but you called me up and you said, "Hey, there's stocks setting up here. I'm scared to death." And I told you I was scared to death too, and looked like the end of the world. And what did I tell you?
Yeah, you said we buy them. This is a really good point because I think a lot of people, I probably made more money in that coincident period than the predictive, or sorry, the confirming period than the coincident or the predictive. because and this was just a classic case. There was just tons of setups in both of those plateau areas you highlighted. And I can't remember, I think I might have called you even in June because the market had rallied back and it looked like, you know, hey, the index has come a long way, but there were just stocks everywhere. And you said, look, we're going to buy them, trust the stocks. And obviously the rest is history.
Yep. I said, you know, I was scared to death too, because I had never seen anything like this with this pandemic. This was really quite abnormal and such a big decline. Everybody was calling for a possible depression. And so it was very frightening. But stocks were setting up. They were setting up just as they always do. Nothing was different. Nothing has changed. Like I said, I've been doing this 9 bear markets, 8 bull markets. I've been applying the same rules, the same techniques the entire time for the better part of over 30 years. For the first 6 years, I didn't know what I was doing, but after that, for 3 decades, I've been doing the same thing, and it's worked every time. So let me tell you exactly what we're going to look for, and then we're going to go through examples of this. So as I said, history shows that the grand majority, upwards of 90% of the big super performance movers, and I count super performance not just as a big moving stock, a fast moving stock, stocks that you can compound your money very rapidly. So even if a stock goes up, you know, 30, 40, 50% in a couple of weeks or a month or so, that's a super performance move as far as I'm concerned, because I can compound those into a gigantic return. So off the market lows, and you won't know, you're not going to know for sure that you're at a market low. That's why it's so scary, right? The market's falling here. We're still very close to the lows. You're not going to know. So you've got to default to the stocks, and you buy a few names. If they work, great. You can buy some more. If you're not getting traction, you hold off and you keep it small. But there's basically 5 things that you're going to look for when the market has corrected and has been down, especially when you get a lot of bearish sentiment. When you see tons of bearish sentiment, everybody's calling for the end of the world. And like right now, we're starting to get a lot of congruency as far as, you know, this is definitely going to be a long-term bear market. And everybody's starting to agree. That's exactly what I want to hear. The next thing I want to see is stock setups. The best setup that you can have in a bear market is to have everybody bearish and lots of stock setups that people don't believe in. So here's what you're going to look for. First, you're going to look for stocks that corrected the least amount during the decline. So the ones that are down the least amount, not the most. Some people look and they want to buy the stocks that are down 90%. How much lower can they go? Well, 0. They could go. Your risk is always 100%. History and my own anecdotal evidence of 40 years of trading say that the stocks that go down the least are going to be the ones that go up the most in the next bull market, not the ones that go down the most. So you got to get off of that. First of all, if you're thinking about buying the beaten up names, look for the stocks that corrected the least and are within at least 25% of their 52-week high, preferably making new highs. 2, stocks that are building bases. They're consolidating within the context of a long-term uptrend, which we'll talk about in just a second. You want stocks that are moving sideways, building bases while the market is correcting. They're resisting. This third thing is stocks that have surged in price off the lows, the largest and the fastest movers, the ones that move the most off the lows in the shortest period of time. Then IPOs, recent IPOs. The best time to buy IPOs that are recent, we call primary bases, which are the first base after an IPO, is coming off of a correction. And then what you want to see is you want to see a proliferation of this. You don't just see 1 or 2 names. You want to have a handful of names, and those names start to work on balance, and then another wave, and more stocks setting up, and more stocks meeting this criteria. And once you start to see that proliferate, and your initial toes in the water, if you will, on your trades are working, you can start ramping up. So let's start with the 1990 example, and then I'm going to move on to some other periods also. 1990, this is the NASDAQ coming off the lows, not directly off the lows, but just coming up right off that right side, just as we just started to come off the lows. And a stock that had already caught my attention was Amgen at the time. And this is the day that I was buying Amgen. All right. I was buying it on this day when it was making a new high. And I want to show you, let's look at the contrast between Amgen and the market at that time. Look how Amgen is in an uptrend while the market's in a downtrend. See, that's what you want. You want to make sure that the stocks are in an uptrend. And if you want a very easy way to do this, if you go to either of my books, there's the criteria for what I call the stage 2 uptrend. It should meet all this criteria. If it's not meeting these 8 criteria, then you're not in a stage 2 confirmed uptrend. Also in MarketSmith, there's what they call trend templates, my Minervini trend templates. There's a few different templates in there that you can use. A confirmed stage 2 uptrend is what we call the 5-month. You go to Open Stock Ideas if you're members. If you're not, you can join, and you can bring up my trend templates. This will also tell you the health of the market. You know, when the market's really healthy, you'll see 700, 800, 900 names are in an uptrend. Now, you know, you've got, I don't even know, I haven't ran it today, but very few names that are in an uptrend. So that's a good indication of the health of the market. But that'll give you that list and let you know at least a starting point of what's in an uptrend. Now, well, going back to Amgen, when this was so predictive, because as the market was correcting, you can see that Amgen is hitting new high ground. Every time the market has a little rally, Amgen actually rallies into new high ground here. Then the market rolls over a bit, it holds it back, but it goes right back into new high ground. And then right around the lows here, this is where it gets really bearish. Everybody starts throwing in the towel. You come in and sometimes you undercut a low, you create a shakeout, you create the final pullback and the base, and then you tighten up in the right side and you set up perfectly. Now you're coming up right out of that low. One of the very first stocks to come out was Amgen. It went up about 300, I mean, it was about 350% just in the next year or so. Was a big winner for me. If you take a look at the market, this is where it emerged, right off the low. And when you start to see stocks setting up like that around that low, that's a good indication that you may be at or near a bottom. So what I call these the sore thumbs. And I started this off talking about how you want to, it's very easy to spot these, or easier to spot these in the corrections, because of the contrast between the uptrend and the downtrend in the market. There's this contrast where you really can't miss them. And a good thing to do is to run, there's a screen that you also is in MarketSmith. It's called the relative strength line blue dot. And again, you can go up to the open stock ideas. You bring this up. This is going to show stocks that have the relative strength lines moving into new high ground, coming out of a base. I love to run this when the market's in a bear market or in a correction. And you're going to come up with names like a name that I recently traded, symbol BBT. And just real quick, the reason why we're doing this, a lot of people talk about leverage. A lot of the leverage that I get in the market, I get from buying stocks that have the octane and have the engine under the hood to give me the type of moves that I can compound my money very rapidly. So I like to get my leverage from the stocks themselves, not necessarily putting on margin, but being in names that have the potential to move. Again, look at the contrast between the two, where you have in a very strong uptrend in a market that's downtrending. This is a stock that we just recently traded. I just recently traded. Mark, I don't remember. Were you in BBT? I think you've been avoiding the market pretty much, and I think you took a pass on a lot of these oil names. Or were you in this one with us?
I was not in this one. I was in earlier this year in some of the oil names, but not this particular one.
That's right. That's what I thought. I had bought this right here as it was coming out of this space. I think it was on the 24th. And it ran up. I actually scaled out of it as it went up. I sold it on a few days. The last day I sold it, actually, that day, I could have captured 50%, and I ended up nailing down 34%, but it went higher that day. But it was a nice quick little rip. Again, look at the market. The market only just had a blip off the lows, and this stock just had a tear. Now, again, this is a cyclical stock, and this may be just a tradable move. It may not be a sustainable move, but 50% in 10 days, that you can make a lot of money. You can compound that and make very big returns, and that's what I'm looking for. I'm looking for that as the starting point. Now, again, if I can get myself angled into a position that I'm profitable, go for a bigger move, great. But I want the short-term moves to even be able to, on their own, get to my goal. And this is how I do it. And this is the leverage. This is the kind of leverage. Look at the difference between the market's up a couple percent and this is up 10 times the market. Mark, do you remember Lumber Liquidators? I think this is one you did trade, right?
Yeah, absolutely. I didn't hold it long enough, but I remember it well. Yes.
Yep, I mishandled this, and that's one of the reasons why I like to bring it up, because it was a stock that I keyed on perfectly. I was watching it and bought it perfectly, but did not make the money that I should have made on this stock. But you can see again, we had a little correction here, and this stock was just working its way higher, similar to a stock AMPH, which is a pharmaceutical name that this last year also was looking very similar to this, and I traded that name and had a quick little move on here. But take a look at the leverage that you got from lumber liquidators. So again, the market starts to trough out here and starts to move up off the lows, and you get a little move out of the market. But you look over here, 5 months later, the market's about flat, and lumber liquidators runs up 90% in a flat market. Again, tremendous leverage, tremendous leverage. This is what you're looking for. And you need to be looking for these things now when the market's down, not later. This is the time where you're going to see where the leadership is, and again, you're going to get those sore thumbs are going to start sticking out. So let's look at some bases and look at some other stocks that I've traded over the years and show you some of the points and what I was looking at going up to this. Keep in mind that when we look at these charts, and again, in our master trader program, there's a 500-page workbook. And out of those 500 pages, I don't know, there's hundreds of examples. Not every example is the stock I traded, but the grand majority are, about 90% of them. The same thing with this presentation today. I'm not going back and just saying, hey, well, this stock makes my point, and finding something and reverse engineering this. These are stocks that at the time, I had no benefit of hindsight and was trading at the time. And I'm showing you how I had those eyes, how I had that, I don't want to call it clairvoyance or foresight, because I don't know what's going to happen, but what were the readings that I was looking for? What were the things that led me to make these decisions? And of course, I had lots of losers too, and I managed that risk. But let's take a look at some of the names that worked out here and what some of the better names look like. So this, of course, is Amazon. The 2 times where I was really buying Amazon was off the IPO, which I'll show you later, and this time right here after a big market correction. And again, a complete opposite trend. You're turning into an uptrend, and you just started turning into an uptrend. You're just starting to turn into an uptrend. You're just in a stage 2 uptrend. This is the first base. This is the earliest that I would want to trade a stock, is once it turns into that uptrend. But the way it moved against the market was really quite telling. Again, look at the leverage you get. You see, the market is still bottoming. This market didn't bottom out and start turning up until after 2003. So, but Amazon started turning up in 2002 and had already put its running shoes on and already made a big gain before. And of course, obviously you know the rest. If you held this for longer, this is a huge moving stock. Take a look at it. Here's something I want you to see though. Take a look at Amazon in 2002. All right, here's really something to contrast. So we take a look here. It's coming out of this is a perfect cup with handle. You can't get a much better cup with handle. Down here, you have my signature cheat area, whereas you're coming through this little pivot right here. Those of you who've read my books know what I'm talking about. Look at the market, right? Coming off the lows. But now I want to fast forward to today. Here's Amazon today against the market. What is that telling us, Mark?
There's no inefficiency or inefficient pricing in Amazon anymore. It essentially it's a 1-for-1 correlation with the NASDAQ.
Yeah, it's become the market. It's now become the market. It's become this big company, this big bloated company that is the market. And now it doesn't have that inefficient pricing where it's able to be in its own cycle, in its own earnings cycle, its own price maturation cycle. So now you got to start looking for the next Amazon, not the Amazons and the Netflix and all the names that at one time when they were making their big moves, very few people thought that these were going to be these big winners. Now everybody believes in these stocks, and of course the move's over. So now it's time to start looking for the next leaders.
CMG, Mark, this is a good opportunity. I think that's the trap everybody that's new at this falls into. They want to buy Apple and Amazon, or they want to look for those. And the reality is, if you don't know what it is, you might be onto something for the next cycle. The trap is to look at the old leaders. The old leaders are not most likely going to lead in the new cycle.
It's very difficult to do because the new names that are the next Amazons, you're not going to be familiar with. You're not going to have that comfort of saying, oh no, well, of course they're not going to go out of business. See, a stock doesn't have to go out of business to make you either lose money or do poorly. It can simply, I mean, you know, Cisco Systems and Microsoft and all these names that topped in the 1999 blow off that I was in and made lots of money in, they didn't go out of business either, but they put a lot of people out of business, and they went down and moved sideways, and some of them didn't come back to break even for 20 years. Same thing happened in the 70s. Eastman Kodak and all these names that were the high flyers, the high tech names of those periods, Avon Products, even the 50s, the 60s. You can go back to the 20s. All these names, they ended up topping. Eastman Kodak went sideways for 24 years, while the S&P 500 went up 500%, and it was the Wall Street darling. So this just happens over and over and over. CMG is another one that at the time, you know, it's coming out of this base in 2010. And again, you know, this is where a lot of people at this time didn't hear of Chipotle. This is where we were buying it. I can't remember. I think you were in this, weren't you in this name?
Yes, I was. And just even for reference, if those of you guys, a lot of you wouldn't remember, early May, we had a flash crash. And you see how well the stock, you know, even as it set the left side of its base, it did not fall apart the way a lot of the other names did.
Yeah, it held up and put a perfect base in. This goes all the way back to 2010. And just real quick, a little you know, trivia or history here. Mark Richie, who now, you know, works with me on a regular basis, the co-instructor of Master Trader Program, and works with us at Minervini Private Access, came to the first Master Trader Program in 2010 and was a paying Minervini Private Access client up until just a couple of years ago for 10 years, right? You were a paying client for 10 years.
Oh, yeah, just over a decade. That's right.
Yep. So again, he's one of my best testimonials. So again, here, look at the leverage you get. You see the market, and this is more, this came out more of a confirming. Okay, certainly not coincident with the low, but you did back off a bit here, and it sort of came out coincident as you came up off of that pullback, or almost a retest. So you can almost call this coincident to confirming. But you see the market moves up here, you get a lot of leverage. You got a lot of leverage from this stock. Okay, so now the next thing, remember I talked about these 5 different things to look at. The next one is looking for the fast rebounds, the fastest rebound. This is a great story because it's kind of comical and sad, but it has a happy ending. So in 1990, I had seen this stock come ripping back off the lows, and this is where I was buying the Amgens and the U.S. Surgical at the time, Healthcare Compare, like I said, Ballard Medical Products, a bunch of these names that very few people ever heard of. Cisco System at the time had, I can't remember up to this point, but they had 16 straight quarters of triple-digit earnings. It was just one of the best performing companies in the stock market, and it came ripping in just 10 days. As the market corrected and this stock corrected and took out its lows of the IPOs, it came ripping back and was in new highs in just 10 days. And then it backed off. And as it started to turn up, I bought it right here. I bought it right coming up right here around 30 bucks. I sold it at just above 35 right here. And then the stock went up 70,000% and would have never stopped me out. So again, a leader coming out. I happened to, in that same period, I made over 35,000%. So I got half of the move of Cisco, trading a bunch of names. So it does have a happy ending. Let me show you some more recent examples that are similar. So Peloton did a very similar type of action off the lows off the COVID crash. So again, you had an IPO, you came down, you took out the IPO lows, and then coming off the lows, actually predictive, just before the lows, you had that first move up, and then it ripped back at the new high ground. It was back at new high ground in 18 days. Then it pulled back, and you had this little, very similar to how I traded Cisco was the pullback, and as it started turning up from the pullback, that was a great spot to move in on the stock, because again, this power was telling you that this stock wants higher. Look at the leverage. You get this incredible leverage. Now this is coming out in the 30s and moves well into up $140 in a very short period of time. What is it? 1, 2, 3, 4, 5, about 6 months. Very incredible leverage there. Let's take a look at DocuSign. So DocuSign's another one where, again, you see how we pull back here in the market. And of course, remember, if you were around during that time, this was one serious decline. This was no joke. This thin little line here may look innocuous on this chart, but holy cow, was that a scary time. So you can see a few things. One, you're still in an uptrend. You come back to the 200-day, but you rip back into new high ground in just 10 days. And again, just like the other two, you get a little pullback, you have a pause, and you get a little pause and go, and that's it. That's where you get your chance to buy that coming off the lows. Take a look at the leverage. Look at the leverage you got with that stock. Again, coming out around 100, goes up here, I don't know, $300 or so. Big move, couple 100% in what, 1, 2, 3, 4, 5 months, 5.5 months. This is the leverage I'm talking about. So here's one. This actually, do you remember? I think you bought this. Actually, I think you're the one who brought this to my attention, Mark, back in 2020. I can't remember, yes. But we bought this. So this stock was incredible. Teladoc at this point here, and I know I just heard people saying now that Teladoc's this once in a lifetime opportunity. It's a buy, and of course, we know some famous people that have been buying it all the way down. This was the time to buy Teladoc. This was where it had its future in front of it to make a big move, and it was telegraphed by, look at the strength of this stock. Again, think about this. This crash here, this COVID crash that took the Dow down 9,000 points. You don't even come below the 50-day. You didn't even close below the 50-day moving average. The 50-day moving average is in an uptrend. You want to talk about strength, and coming off the lows, it's back in new high ground in 3 days. 3 days. This was one of the strongest stocks in the entire market at the time, and we bought it right here. It pulled back, the same exact play as the Cisco play, as the Peloton play, as the DocuSign, where you move into new high ground, you come back on that first pullback, and then as it starts turning up, that's where you get that opportunity to buy, coming right off the lows there. One last one. This was another one that you were heavy in, this smaller cap name at the time, but you remember this one, Mark?
Yeah, absolutely. I remember this one well.
You held this for a while.
I did. The funny thing is it put in a subsequent follow-up buy that I should have, if I mistraded it, as I didn't add back.
Over here?
Right there, right. But yeah, this was sort of textbook. This was actually a power play that came off of, if you see the general market, this stock had doubled and then got really, really tight. And you see that 1 day in volume dry up there. This was just sort of a textbook.
Yeah, I bought this. Mark bought this. This was a stock we put on for our members. I had sold it. If my memory serves, I sold it right into this gap up and this big move up here. Mark had held it. I was looking to add it back, and I did not add it back. We put it on buy alert over here as a potential add back. But you had held it for a bigger move and made more money on this than I did at the time. But kudos to you. Let me show you something else that's very interesting, and that can happen off the lows, but happens subsequent to the lows, and it's what I call the lead and rest. I didn't have a better term, so I came up with that. But anyway, it's how I handled Netflix. Again, a lot of these stocks that you go back and you see were these big winners. And a lot of people, were all head over heels over these names after they made these big moves. I was buying these names when very few people were interested in them. Amazon, which I'm going to show you later off the IPO, when Amazon first came onto the scene, Wall Street hated it. For a decade, they hated it. They said they'll never make money. It was one of the most hated stocks, if you can imagine that. Now it's one of the most loved stocks. So at the time, at the birth of that technology and that great company, no one wanted it, and now everybody wants it. That should tell you something. Here's Netflix. This happened after a period after Blockbuster had just been vaporized. Netflix went public. And Blockbuster topped almost to the day. It was within a few days that Netflix went public that Blockbuster topped. It was the new technology coming in and taking out the old. But Netflix didn't really take off until Blockbuster was essentially vaporized going into bankruptcy. There was a long period of, like, I forget, 8 years or so where Blockbuster was just bleeding to death and in a downtrend, and Netflix was marking time. Well, finally, the correction came, the big bear market, the Great Recession came, and this is where Netflix really shined and showed its mettle. And that's where you see the market here. This right here is the S&P 500. We went to lower lows here. And if you weren't involved in this market, then I can tell you this was one of the most treacherous environments that I have ever traded. I had never had more trouble in a market than I did in the 08, 09 bottom. And it was very difficult. Netflix had already, when the market made a lower low, Netflix had gone up, I forget, 125, 150%. From this point to this point, where the market makes a lower low, Netflix more than doubles. Now, this is where it gets a little tricky, and people misread relative strength, or they misread a setup. What they're looking at, they start looking at this base and they say, look at this relative strength line. It's lagging. It's lagging. It's not confirming. Stock's breaking out. It's not going to new high ground. This is the one time that you can, this is the caveat where you don't need that, because you had it so strong already. See, it made that big move, and now the market is catching up to the stock. And during this period, you're going to underperform. But don't worry about it. Just wait for it to form a base and buy that base coming out, because it's already told you something's going on here. Something's happening really special. The stock doesn't go up 150% while the market makes a lower low in a bear market if something's not happening. And certainly once it bases, if it doesn't break out and take off from there, then it's not sustainable, and you just cut and you run. But this worked out perfect from here. So that's just a little caveat. Now let's get to I talked about, I think it was the fourth one, was looking for recent IPOs, which we call a primary base. Okay, this is one that I traded. Now, again, you want to trade. David Ryan used to say this a lot in the Master Trader program when he was my co-instructor. He would often say that you want to trade the best setups from IPOs come in the corrections, because later on, after the market's been going up, it's like any other business. They have merchandise to sell, and it sells easier, so they just start throwing anything at the market. When the market's in a correction, especially a long correction, you get some of the better, not only the better companies and the better IPOs, it's more selective, but also, again, they stand out. The strength stands out like a sore thumb, and you get to really see which ones are really holding up and bucking that market. And Dick's Sporting Goods was one of them that made a huge move from here. I didn't participate in it all, but it went up, I believe it was about 500% from this point. And I'm going to go back to Dick's in just a second. I want to show you a few more, though. Ollie's was another one. This is one that David Ryan and I were buying. I actually bought a little bit just before him. I think it was about a week earlier, and then we were both buying it on this week here as it turned up. And you can see markets making a lower low. It's just coming out of a perfectly formed cup with handle, and a perfectly formed, if you guys are familiar with my volatility contraction pattern, perfect VCP. Remember, Mark, we were just talking about this the other day. It doesn't get any better than this, does it?
Yeah, this is somebody giving you the pair of aces, and you sort of looked, the market made a double bottom, and it was pretty scary there. I remember in January, February, and it ran up, and then this is, I would call this more of the confirming, where you see the market just pulled back there, while this just set a perfect little handle. And then if you look at the handle, you had a nice little cup and handle, sort of the pattern within the pattern, a perfect fractal.
Yeah, and you have the cheat area right here. So I would actually say right here it was coincident. Right here was a coincident, and then you confirmed, which this is the best scenario. The best scenario is that off the lows, you get some type of base, some type of setup that either holds up and breaks out. And then as you either form the right side in the market or you run up the right side, you get another pivot at a higher level. Sometimes it's in the lower third, and then you get the middle third, or it might be the middle third to the upper third. And now you set up and you tighten up even more and you come out there and it actually improves. And you could be adding to your position here, or if you hadn't taken the position yet, you take a new position here because the setup's even better now. Absolutely perfect. The volume comes off and just comes down to negligible volume in the pivot, perfect volatility contraction, breakout, big volume, excellent, perfect precedent, one of the best precedents. Okay, so here's Amazon, where this little arrow is. You can see right there, I'm buying Amazon. This is 1997. September of 97. This is the first time that I bought Amazon. This is a textbook perfect base setting up. Again, can't get any better for an IPO base. Volatility here, big, deep, similar to like a LinkedIn and Facebook, where you start off and you correct, and then it tightens up and it gets really nice and it moves into new high ground. And nobody wanted Amazon here. Nobody wanted to look at this. Incidentally, I'm not sure this is going to be the next Amazon, but history does repeat. There was this little stock here, this biotech, a symbol BLTE, that came out of a very similar base just recently and had a great start. I mean, look at this stock practically doubled. I think it did double in like 3 days. We put this on buy alert right over here, and I was looking to buy it, but it gapped. So I stayed away from it. I don't chase gaps. I don't chase stocks extended. A couple of days later, you could have bought it again. And this was a big mistake that I did not buy it. And that's one of the reasons why I brought it up. I like to look at the stocks that set up that I might have made a mistake on too. And this one just blasted off to the moon. So again, now, I told you I want to go back to Dick's Sporting Goods, and there's a reason. I want to show you something that we call the failure reset. This is something that, Mark, I think you have perfected your eyes to see these, better than just about anybody. This is one that I want to show these guys. So now this can happen. It doesn't have to be just an IPO base. It could be have a lot of trading history, but the theory or the setup is the same, where you get an initial setup, but the setup fails. It doesn't work for whatever reason. It might break out and fail, or it might never break out. In this particular instance, we get this IPO. Dick's Sporting Goods goes IPO. It has a nice move, and it sets up this base right here. This is just a nice little cup with handle. This is literally a perfect IPO setup. If this stock breaks out from here and I'm watching it at the time, I'm a buyer. I'm buying this stock coming out here above 22.19. But it did not. As a matter of fact, I wasn't even watching it then. I didn't even see the stock at that point, so I wouldn't be able to even consider it. I'll show you where I started seeing it in just a second. But what happened was this stock didn't even break out. It just failed. It took out the lows, and now it's kind of falling apart, right? But then they issue guidance, and I forget, it came up on the news wire or something. I saw that the stock was up big. They issued guidance, and right over here, I started watching it because it was a recent IPO. I said, let me watch this. It's acting really well, ripping off the lows, had a really great shakeout here. Let's see if it can tighten up on the right side. Well, during that time, look at the market. The market goes to lower lows. You see, it goes to lower lows. Even here, what happened when it set up here, you see how the market went to lower lows, and that's what took the stock down. But now the market weakens a bit more, goes to lower lows, and the stock is making higher lows. And better yet, it's tightening up, just like we just saw, where we saw Ollie's, where you got that nice right side. The volume came in, right? Look at the volume, comes way down. I don't have time to get into why we want to see the volume down and why we want to see the tightness. You can read about that in my books. You can certainly come to the Master Trader program, where we spend lots and lots of time on this. But again, this is very constructive action. This is what we want to see. This is textbook. And then we get the expansion volume as it comes breaking out. The gap is not big enough to make it extended. This is one of the few times that I bought on a gap. I know I said I don't buy gaps, but this gap was not that far from the base. It was enough where it was close enough. So I bought this here, and this is where I went into the name. Again, you started off with a setup that failed, but then it reset. So you don't want to walk away from a stock just because the stock, maybe you're watching it and it's looking good, the market's in a correction, and then it falls apart a bit. If the fundamentals are there, if it resets, if it's showing strength coming off the lows here, you see it comes ripping off the lows back into new high ground. All these stocks are basically showing you one or all of the characteristics that I opened this up with the 5 things that you want to look for. Under all these various circumstances, you have all those characteristics at some point that are giving you that tip off and telling you what to keep your eye on and what to watch. This was Marka and I were just speaking last night, and we just talked about when he was buying Alibaba. So I thought I'd bring the chart up here. You remember this one, Mark?
I remember it very well. Yes.
Because we both bought it and I sold it, and once again you held it longer, and made. This is one you made a boatload on, if I could remember.
Yeah, this was a big winner for me. And if you look, you could just sort of this was, again, you could see where the market bottomed there. And this was, if not mistaken, right, this was spring of 17. We sort of had this was after the election, I want to say, that the market had kind of a volatile and then crazy time. And there were a number of these primary bases. This one, for those of you who study this, Shop, Square, I was actually looking over this last night, where you just had a number of these stocks that during that whole corrective period, where you can see this, the market kind of went nowhere for about 18 months there. And this just built a really nice base. And then you had just classic VCP action, tight volume. And it was really a one-way street. If you look at where this stock went, I think it almost doubled before even closing below its 50-day.
Yeah. And again, this is almost lagging. This is confirming to the point of lagging the market. And again, like I said before, we're looking to buy those leaders off the lows, but let's just say you miss those. You're going to have, first of all, the market is usually led by anywhere between 3, 4, 5 groups off the lows. Those are your true leading groups. And it's led by a number of names, but you're going to have, if you have a stock like some of these big winners, you're going to usually have 2 or 3 opportunities to buy them, where, okay, you might miss the first base, but then you have the second base. And sometimes the later stage base, the third stage base, and even sometimes the 4th or 5th, you get these blow off moves, you actually make a faster profit because they're in the blow off stage and they start getting really popular and they run up even quicker. So you're going to get multiple opportunities. This is sort of your first reference point. When you're in a bear market, this is what you start to look for. From there, you work forward. If you can get this confirmation and you can see this action, now these are stocks, even if you didn't buy these, let's say you didn't buy these stocks. Well, a lot of these names, you got opportunities months later. Some of them you got opportunity a year later where you got another base form. And like I said, the real action started happening when they got into a really strong uptrend. So don't think that you've missed it or you'd be in a rush to get into the market. But this is your reference point. This is the starting point. And what you want to see, like right now, in this market, what you want to see is a proliferation. In the beginning, you're going to see pockets of names like this, and they may or may not work. Okay, that's what's really going to let you know if you're near a low or not, and particularly if you're in a market where the stocks themselves are bottomed. Because a lot of times the stocks will bottom before the general market, the indexes, and you'll get the indexes will go to lower lows, but the best names have already made their lows. Almost always the best names make their lows well ahead of the market. So that's why you've got to look ahead of time. So at that point, you'll start to look to see if there's a number of names that are starting to set up, and maybe you take a few of those stocks, maybe not, you watch some, and from there you're looking for a string of successes. You want to see that the breakouts are starting to work, and around that time you want to see the follow through day, you want to see a lack of distribution, and all that starting to come together around the time when the market starts to turn up from the lows. What you don't want to see is the number of stocks diminishing, or there's no name setting up, and then you start trying to go in there and guess and buy off the lows, buy beaten up names and try to guess whether a stock made up. You don't have to guess. Remember, you don't want to get the lowest price. You want to get the right price. That's one of the keys to my success. I never look for the lowest price, and I'm looking for the right price. The right price is the point at which the stock moves very quickly, up or down. I want to know I'm wrong just as fast as I want to know I'm right, because I want to be able to move into cash and protect myself, or take that money and move it to something else that's a better investment. So the right price is the price at which the stock moves very quickly and gives you your answer, and preferably, of course, where you start to get a lot of stocks acting well and you see a recent string of gains. Now, if you say you try a few of these and you try 2, 3, 4, 5 names, and you're producing losses on balance. Maybe you didn't even lose on all of them, but 3 of them are losers, 2 of them are winners. You haven't made any money. There's distributions coming out. You had a follow through day. Now you're getting distribution in the market. Guess what? There's no reason to start getting heavily invested there. You pull back and you wait for more productive and constructive behavior, and you try a few more with a toe in the water. This is what I just did recently, and it was a pretty good toe in the water. I mean, I had some names like BBT, some of the oil stocks, COP, that made some nice quick moves. It was very short-lived, though. We came off the lows. I saw some stocks setting up. They were in the cyclical area, so I was a little bit concerned about that. But you had some tradable ideas, but they didn't hold. They didn't hold. The market went to new lows, and that's okay. But the stocks didn't hold, and so we got forced back to cash. Now I'm back in. I reset. I'm looking for the same thing all over again. I'm looking for stocks to meet these criteria, and I'll start moving in all over again. Okay, real quick here. We don't have time for questions. I apologize. Again, so we only have time for about an hour today. Again, we do go over this stuff for 4 days of curriculum, a day of live trading, and 2 days of live Q&A for 7 total days. Mark Richie and I will be instructing for all those days. I think it's about 30 hours total. It'll be coming up in November, of course, and that's the Master Trader Program that we are in I think it's our 12th year. Is it 12 or 13? You came to the first one, 2010, Mark. And this is where you're going to learn everything A to Z to hopefully trade like a champion. And hopefully you will be, maybe I'll see you in the next US Investing Championship if Norm keeps it going. And we know a lot of our members and a lot of our graduates from the Master Trader Program have either won or been in the top leaders list of the US Investing Championship. So it's great to see. Mark, thanks. Do you have any advice? Mark, you've been, let me just first say that Mark has been, has an incredible track record, and has been an amazing student of the market, and has perfected virtually all that I could teach somebody. And it just I'm so happy to have him as a part of our organization and working with me and as a co-instructor. Very patient, very patient. The thing about Mark, he's can wait and wait and wait, and then strike at a moment's notice and go from being coy to super, super aggressive. It's sort of what I think is one of the main traits of a really great trader, is to be able to know when to really step on the gas. Like Stanley Druckenmiller said, know when to be a pig. You're not so piggish right now. We're in the chicken camp. That's right now.
Full chicken right now.
Full
bird.
You got any advice for for traders? There's new traders. There's a few different type of traders that we're probably talking to here. New traders that haven't seen much and maybe you're just getting to the market. Traders that have gotten their head caved in and didn't do the right thing maybe before, and they're trying to learn how to improve. And then of course the people who know what they're doing, I think they'll take this information and be able to run with it and see a certain value with it beyond maybe what a new person can see. But what do you have for advice for the newbie and the person who is maybe having a difficult time in the market?
Sure. Well, thanks for flattering me and the kind words. That's very nice of you. Just bring up that Dick's maybe example real quick, because as I was looking at that, if it's not too much trouble, you see right where the general market comes off, and this stock looks like, there's no hope for this thing. And then it's almost 1 month later, it goes from looking terrible to perfect.
Yeah. Absolutely.
That's kind of where we are, you know, or you see where the
Or
market
could be, or we certainly could be.
No, right. That's what I mean. The possibilities. So for people that look around, right, and then you see where the market undercut the low, and you're only a week away, you know, 2 weeks away, maybe from a really nice setup here. Well, this is why this is the time to be, you know, putting in the work every day, because we just don't know. It might be 3 to 6 months before we see a bunch of these, but it could be 3 to 6 days. We just don't know.
Well, look at your trade on VAPO. I mean, it didn't look so hot right here.
That's right.
And it was just very, very short period of time, you know, later that it was literally picture perfect, absolutely perfect, right?
Right. And everybody thinks,
remember what was the one that I'm trying to remember. I lost my train of thought. Starts with a P that you first saw that I recommended. Was a low price stock.
Oh, PCYC, Pharmacyclics.
Yes, PCS.
Absolutely, yes. I thought I thought he was crazy. I won some money off Bob Weissman in a gentleman's bet at the Master Trader program in 2018 on that because it was so low.
It broke out the day the market made its low. The market was making its lowest low, and it broke out that day.
It was one of the first stocks. That was before the service was even around. I remember thinking, what is this guy doing buying a $3 stock? You know, when the market was precisely this sort of pattern. It was the stock had doubled, tightened up, was breaking out the day the market made a new low.
But here's Cisco. Look, Cisco looks like cocky right here, just like Dick's, where it has the shakeout, then it comes ripping back, and it's that strength that tells you that something's changed, something's going on here.
And my other piece of advice, I guess, would just be, especially in the environment we're in, just shut off the news. Ignore all that stuff. It sounds crazy. I say this to people and they always think, you know, well, how are we going to know about this or that? Let the stocks guide you, because to Mark's point earlier, when everybody's calling for a recession and, you know, this is the bear market that's never coming back, you're going to see a lot of stocks. And if you listen to all that other stuff, you're going to pass on what will wind up being a phenomenal trading opportunity. And look, it may take you a time or two to really. Every trader has to have some breakthroughs and aha moments where you see it once and maybe you play it very tentatively, but you make a little bit of money and you go, well, when I see that again, I'm really going to get aggressive. And that's really how you learn. Nobody puts on their pants the first day they become a full-time trader and knocks it out of the park. It takes some time.
I certainly didn't.
Then I am extremely excited right now because, or at least, I don't even like to use the word excited, but I am looking forward to what I think is going to be a really good opportunity. I don't know when. That's why I'm putting in the work.
Yeah. Yep. Well, it will strike at a moment's notice. That's for sure. And that's why you got to be prepared and ready. So I hope that you guys join us in November when we do this for days and days and days on end, and we can really dig in deep and you can see the whole picture A to Z. But I hope this has been helpful and that you can use this information to improve your skills and your results. And I'll try to do other webinars that are timely. And you guys, good luck with everything. And I'll see you on Twitter. All right. Take care. Mark, thank you very much for taking the time. Really appreciate it. And we'll all talk soon.
All right. Take care, guys.
Take care. Bye-bye.